Well, good morning, everyone. Welcome to our Wednesday morning public open house slash trading room. My name is Eric Senft. I'm going to be your host here for the next hour and a half or so. Depends what the markets are going to give us. For those of you who are new to our room this morning, welcome. I'll give you a real quick overview of what you're looking at. This is the diversified trading system, and it's diversified because we have three tools to look at the markets from three different points of view. Here in the top left, we have the Hawk Scalper. Top right is the Falcon Swing Trader. Bottom left is the Eagle Trend Trader, and the bottom right is actually the latest addition to the DTS family. This is called the Raptor. And the Raptor is kind of incorporates elements of the Hawk Scalper, the Falcon Swing Trader, and the Eagle Trend Trader all into one. The charts you're looking at here are the NASDAQ. I'm also watching soybeans and crude oil this morning, but I would be happy to take a look at any market which is of interest to you. The market's very summer-ish of late. Yesterday, beautiful rally. The market just picked a direction out of the gate and just kept going. But look at the overnight. Here was yesterday's overnight, and here was last night's overnight. Just very, very quiet. Or as Elmer Fudd says, very, very quiet. I'm going to shoot a trend line across the bottom here just to see where we're at. Aha! We have a pretty serious trend line overshoot right here. And that is actually not bullish. A lot of people think a trend line overshoot is bullish, but it's not. It's temporarily bullish, but really it's kind of bearish. So we'll see now how they're going to do on the bottom end of this trading range. I should adjust it slightly to account for that. Let's see, did we still overshoot? Oh yeah, we did. So what I'm going to look for now is I'm going to look for what we call a test of the extreme. And a test of the extreme is quite simply a failure. So we're going to see whether or not they fail here and instead send the market lower. It's only the first few minutes. I try not to get too excited the first few minutes of trading, although I see the eagle here producing a red bar buy signal, which tends to be one of our better signals that we favor. Let's see what else is going on here. Aha. The Hawk is telling me otherwise. The Hawk Scalper, see all these yellow bars? See how they're more or less on the same plane? See how it resembles barbed wire? There's a reason we try to avoid this type of situation. I think what I'll do is I'll see whether this eagle trade is going to give me a second push on the entry. In other words, the signal is since engaged, everything is in sync. I'm going to see whether or not the bars fade here a little bit lower. Maybe give me a chance to enter a trade above the limits of this bar. The Falcon also a little bit in flux. Our trend line, which is our guide here for our directionality, also twisting back and forth. Our filter all out of sync. We're working on a trend change signal now, so the trend line has changed color. And with the trend change signal, what we're looking for is something like this. So the trend line changes color. Here are the buyers. They change the trend line from red to green. Here come the sellers, and then here come the buyers, and we produce a signal. All signals are produced the same way, regardless of the tool you're watching. When you get the beginnings of a signal, you get a warning dot and an audio alert. And then when everything is complete, you get a triangle and a hash mark saying that you have a complete signal. Time to make a decision. But the market very much sideways at the moment. Let's take a look here at the Raptor. And as I mentioned, the Raptor is sort of a blending of the other tools and incorporates elements of the Hawk, the Falcon, and the Eagle. All right, so right now the Raptor not really giving us much to work with either. The market looking very much sideways. We talked about this yesterday, where when the market is in an obvious congestion, really the best thing to do is just let it get outside of that congestion area. We might be able to pick up a scalp trade here and there, but for the most part, anything within here is going to be very high risk. We'll see if they can't shake things loose. This tool that you see right here, this is called the Geiger counter. This is the latest addition to the DTS arsenal. Actually, this tool will be available for any chart. So regardless of whether you use DTS, if you use a time-based chart or a tick chart or whatever, this is a universal tool, and it's essentially a tape reader. So it gives you a visual of the time and sales. And you can see that, there was a little bit of buying effort back here, no real follow through. Right now, the buyers and sellers more or less evenly matched, although maybe the sellers have just a slight upper hand. The needle is red. You get the display of the time and sales here. This tape reader, though, is very helpful in seeing the bias. So sellers a little stronger here, but once again, we're looking for some follow through. And so far, we don't have too much of that. At least not in the NASDAQ, which is starting to tail off somewhat. Crude inventory also today, so that'll make for an interesting trading day. Let's take a look at crude oil, speak of the devil. So here's crude oil produced just going into the open or around the crude oil open, produced a nice hard edge bounce signal. We're getting some follow through on that. This is a soft edge bounce, and we'll give this one a couple of moments here to sync up. I'm just checking my Falcon and Hawk charts. Yeah, they actually had a better entry available to us. Let's take a look here at the Falcon. So we had a nice little trend line touch signal. Here was the signal that we wanted or would have wanted. This was our trend change signal. Notice the green to red trend line change, the down, the up, the down. So the sellers take the market, change the trend line. Buyers try to take the market back, fail. Very, very good sell signal right there. So that also out of the crude oil open. Crude looking oddly weak. I think a lot of people were expecting crude oil to be stronger today. just getting a look here at the soybean market. For those of you who have never traded soybeans before, interesting market in that once soybeans pick a direction, they pretty much stay with it. This would have actually been a rather choppy day for soybeans yesterday. So here we are with soybeans. We're producing a sell signal, a hard edge bounce. We let the signal engage. Now we're going to look for what we call that second push entry. We know the current limit of the bar. Yeah, no doubt all this is in reaction to this support right here. Let me see, how can I set this up? If I take it here, can I cover it up there? No, I can't. Trade Manager says, Eric, you can't afford to do that. So let's take it here and cover it above the hard edge. That I can do. Now what I'm going to do is I'm going to also run a stop strategy. These blue dots that you see on here, these are my stop strategies. I have 16 different stop strategies to choose from. Each one is customizable. And what the stop strategy does is it effectively manages the trade for me. A very important feature of the trade manager is this risk component here, where it, as you saw when I tried to cover the trade up here, it did not allow me to risk more than I could afford. And did you notice here how the trade manager also took my initial risk and is now rolling my stops automatically? So that enables me actually to look elsewhere for other trading opportunities. All right, so we'll let the soybean trade percolate a little bit. See how we do. And like I said, if there's any market which you would like me to take a look at for you, I can certainly do that. Okay, we're getting a first micro-macro cross signal here. Still within this trading range though. First micro-macro cross, a high probability signal, which is why I pointed out. See, here's one also to the upside. When your micro line, that's the thin one, crosses the macro line, you produce a signal. Everything is in sync. So in this case, everything is all green. It's a high probability signal, usually one that we get on board right away, but it's this sideways action that we've got going on that's a little bit annoying. Malesh is asking, if possible, an Indian stock future. Do you have a symbol that you would like to see? If I can get it in my data feed, I will definitely pull it up for you. This will work for any chart, anything you can plot on NinjaTrader. So it doesn't matter whether it's a currency or a stock or a futures. Mark says, the markets are very suspect this morning. My hands have lost feeling from sitting on them for so long. That is the truth, isn't it? Mark is one of our members. Jim is asking, does this work on MT4? No, it does not. And I'll tell you the reason why. It's not that we don't like MetaTrader, we do, but the programming required to make all this work, only NinjaTrader's programming was sophisticated enough to pull it off, especially this trade manager module. This tool that's going to protect you, essentially keep you from wiping yourself out by controlling your risk exposure. Okay, Militia's given me a symbol here. Let me see if I can get this in my assortment. All right, maybe I can. Well, it's there anyways. Let's see if I can pull it up if it's on my data feed. I don't know if you guys can hear all those gunshots and ricochets. No, I'm sorry. That is not part of my assortment. That's too bad. I would have enjoyed taking a look at that. It all depends on your data. It's not that you can't make it work, of course. It just depends on what your data stream is. Yeah, my data is kinetic, Milish. I don't know. There's, it depends on the assortment, right? Like I don't even get the Russell in my package, and people say, the Russell, how come you don't put the Russell in your package? Well, quite simply, if I want to trade the Russell, I'll go here to the mid cap, which is the Russell's twin brother, and rather than pay another exchange fee, I can just trade the mid cap. So let's take a look at what's going on in the mid cap this morning. The mid cap slash Russell. The two charts will be very, very similar. So while we're letting that load, let's see if I'm missing anything. No, still kind of dull. Okay, the mid cap's a nice market in that it's also tends to make a pretty steady progression. Here's the mid cap on the scalper, and it opened right about here. We didn't get a signal out of the open, thank goodness. I hate getting signals out of the open. The market comes back, gives us a macro pullback signal. And you can see that had some very decent follow through, certainly better than what we're seeing on the NASDAQ this morning. A few signals through here got spoiled by these yellow bars. That was unfortunate. Nice first micro macro cross signal right here. This is from yesterday's session. I should have been following the mid cap yesterday too. So let's see if we get the same sort of channeling effect here on the mid cap. The overshoot isn't as pronounced. Okay, so there's the mid cap on the Hawk scalper. Let's take a look here at the Falcon swing trader. And again, the Russell would be looking very similar. This was our first signal here. We didn't get a signal here. Thank goodness we had the Hawk scalper. This is what we call a late filter entry signal. It's actually a high probability signal. So it does look as though the stock indices are poised to head lower today. Oh, fantastic. Mark says we did a test of the extreme in the NASDAQ, so I'll get over there and we'll take a look at that. But here's the mid cap. So the filter goes out of sync, trend line does not. Very important. Everything comes back into sync, fires a signal. You see, here it is to the upside. Filter goes out of sync, trend line does not. We produce a signal, everything comes back into sync. So it's all green, produce a signal. Nice little swing to the upside. Okay, just quickly we'll take a look at the Eagle and the Raptor, and then I'll get back to the NASDAQ. So this was yesterday's rally in the mid cap. Producing a trend change signal now on our Eagle tool. So this would be a tradable signal for us. Can I cover it above the high? Nope. See how the trade manager doesn't allow me to take more than I can afford? See, this is why I'm not following the mid cap anymore, at least not on the Eagle. I got to set my trade so darn tight. All right, well, we'll get back to that. And last but not least, let's take a look here at the Raptor. And it too just produced a trend change signal, so it does look as though the market is setting up to head lower. Oh, just a quick overview, or here I'll show you on the NASDAQ again. Let's get back to the NQ. The reason I like the NQ is, well, it's twofold. First off, the NQ has a reasonable amount of volatility, which is nice. But what I really like is the tick value. At $5 a tick, it makes it easier to take multiple contracts, making it easier to get better profit, making it easier to manage your trade. It's much easier managing your trade when you have more than one signal available to you, or more than one contract available to you. Wow, the buyers are not giving it up. So Malesh is asking, out of the three birds, which gives the better results? Well, it kind of depends on what the market is doing, right? Because they're different. They're different tools. So if the market is more in a scalping mode, well then I tend to do a little bit better on the Hawk. I probably tend to do a little bit better on the Hawk anyhow, just because it is a scalping tool, it will tend to produce more signals. And I tend to be an all-in, all-out type trader, so when I have the profit there, I tend to grab it. The Falcon swing trader, you know, they all have their strengths, right? The Falcon swing trader, the Eagle trend trader, they all produce good results, as does the Raptor, but you need to wait for their signals. And now the NQ is bugging the heck out of me. Are we still in this range, or did we finally break out? Yeah, we're just kind of testing the top end of this trading range. So what I'm looking for, if we're going to get outside this trading range, I'm going to look for the retest. Then I'm going to look for the signal to print. That's the plan. Right now the Geiger counter says the buying is pretty strong. Oh, let's see if we get this little island. That could be a bull trap. When you get a spike in the tape, very often that is a sign of a buyer's trap or a seller's trap. Okay, we're getting near the top of the hour. Crude oil is going to start wedging up a little bit, I suspect, given the inventory at the bottom of the hour. Oh, I don't think I sent you guys any information yet. If you want any more information about these tools, please, well, you can email me, but you can also go to the webpage there. So everybody's going sideways again. Doggone it. I'll turn my stop strategies off for the moment so the charts look a little cleaner. I'm kicking myself a little bit over this red bar buy because it was so close to the trend line here. I wonder if it's to my profit objective yet. Oh, almost. This tool here is the trade forecaster. It tells you what mode you're in and what mode you're likely to move into. Currently, it says we're only in trend mode for about another 4 minutes. Yeah, okay, well, that makes sense. After which, we're going to move into scalp mode. Oh, won't that be fun? This tool here, too, is an add-on. You can put this on any chart. It's not just meant for DTS. I might as well show you the support and resistance suite. This is another add-on. All these lines that you see here. This is our ultimate support and resistance suite. And it's an assortment of 21 support and resistance lines forecast for the next session. The gold line is simply just your median line. Your blue line are primary resistance and primary support. These tend to be your two strongest lines. And then you get your secondary resistance, which is green, and your secondary support, which is reddish. These are not pivot points. These are not Fibonacci numbers. If they happen to coincide, that's more coincidence than anything. But you can see they're pretty good at identifying where the market is going to find support and resistance. A break of the primary resistance or the primary support usually sees the market move two zones. So you'll notice we broke out here. There's zone 1, there's zone 2. Hit it right on the number. So you can use them as profit objectives. You can use them as places to hide your stops. You can use them as, well, any which way you like, really. They're very universal, and again, this is a tool which you can use on any chart style, regardless of whether it is DTS or not. And our last tool here on the Hawk, I have the Day Ranger. And the Day Ranger is, well, as it calculates your daily range and compares it to the averages. So you can see that the average range is, say, well, the average 10-day range is about 230 ticks. Currently, we're only at 63. And the way you can use this is you can look at this and you can say, okay, well, if the average range is 230 ticks, we're only 60 some odd ticks into the session. I can expect another 170 ticks, so you can use that to gauge what your profit objectives might be. Likewise, you can look at it and you can say, all right, it's 230 ticks. Maybe I'm going to set a 20% profit target today, in which case you're going to be looking for somewhere around 40, 46 ticks. Or let's say I'm going to use 10% of the daily range as a stop loss. So you can set a 23 tick stop loss. Again, that's an add-on. You can use it on any system. It does not have to be DTS. You can just use it on your plain old regular chart if you like. Well, not much going on in the NQ at the moment. We're still kind of stuck in a sideways channel. You can see we're getting there's our breakout. Here comes the retest. Very, very tiny breakout. If they don't drift too deeply and they produce a buy signal, I'll probably give it a go. This tool that you see here, this is the Trailblazer. This is a one-click version of the Trade Manager. You're going to notice you don't have your risk component, your risk manager built in. And all this does is it enables you to preset how many contracts you want to take and their relative profit targets. So this means I have one contract that I'm going to have a 20 tick target and a second contract with a 0 target. In other words, it's going to be a runner. We had DTS owners say here, as far as their trade manager is concerned, they'd say, oh, I get the signal, and by the time I enter and set my stop loss, you can preset your profits. And then go and submit the order. That's too much clicking. Can you make it faster for me? Oh, okay. So what the programmers did is they had to eliminate the risk module. So you're going to need to know more or less what your correct position size is. But here you can you can right click, put your order in, and if that order fills, you're automatically going to get a stop based on whatever your stop strategy is set at. We'll see if we get a fill there. Or here, just for demonstration purposes, don't follow me on this. I'm just showing you guys. You can just hit the buy or sell button. So you see just one click, and I've got two contracts in play. I've got my profit objective. I've got my profit target. Can you see there where it says sell limit quantity 1? Automatically enabled my stops based on what my stop strategy was. This might just work out. I'm going to let it go, see if we can hit the break-even trigger so that you can see how the break-even trigger works. You don't have to use the break-even trigger. I kind of find it handy. I'm still thinking this market is more, it's struggling to get higher. You can see, not like yesterday. Yesterday they were just blowing it out to the upside. Today they're not quite as anxious to do so. But I'm doing my best not to impose my opinion on the market. All right, so we're going to hit our break-even trigger here, hopefully in a second, and you'll see the stops get snapped up to the break-even line, which will be right there. Okay, we hit our break-even trigger. And now if we hit our profit target, you're going to see that this quantity here is going to change from 2 to 1. Which will be my first profit objective, right? I had a 20 tick target. This must still be part of the breakout phase. We're still working on this breakout before we get the retest. Excuse me. Okay, we're about to hit my profit target. Get up there. We'll give it a little push. Come on, get up there. Oh, they're just kissing it. Get up there. If we can make a little progress here, you can also change stop strategies midstream, so to speak. So you can see these shadow lines through here. I've currently got it set at the ATR strategy. That's my blue dots. But it's showing me what parabolics would look like if I chose to go to parabolics. If I want to, I just click accept, and now my trade is in parabolic mode. As soon as this bar finishes, it will move me back to break even because, well, we activated our break even trigger. Or I can always force it to break even. See, currently it's break even plus 1 tick. Oh, you scoundrels. Get up there. Well, that's annoying that they would kiss the profit target and not give me that 1 extra tick I needed to get out. Come on. Nope, they're going to tap me at break even. Oh well, that made the broker happy. Okay, let's see if they start. Well, let's see if, I was going to say, let's see if they start rolling over. First, we have to wait for the retest portion, see if they're going to retest. Very tiny hiccup of a bounce. Well, I wish something more was going on so I could show you something, but right now, we have a fairly sideways market across the board. Watching crude oil here for possible congestion. So here's crude oil on the Falcon. In another 15 minutes or so, we're going to have the inventory report released. And that's going to hopefully spark the market a little bit. We did just produce a trend change signal to the upside, but we do have a market which is in a major decline. So it's a trade that I would take, but I would try to limit my exposure somewhat. I perhaps dial down my risk amount. Instead of 2% of my capital, only risk 1%. But I know from experience, a market like crude, I can't do that. Best I could do is probably something like this. And crude being a little bit more volatile, I do tend to double my profit objectives. So rather than a 400, the high probability target is $200. I've doubled my objective here. So it's a $400 profit on the 2 contracts. But I'll keep an eye on this. So what I'm hoping for is that crude oil gives us a nice little bit of a sideways range. that I can bracket using my OCO function right here. And especially if the market ends up somewhere in the middle before the inventory release. It's a fairly simple way to trade the crude inventory. Yeah, so it looks as though crude more or less locked in this larger trading range. You can see we're flirting here with the secondary support. We'll see if that continues to hold the market down. We'll come back to that in a moment. The nice thing about using these tools, especially the trade manager, is that let's say you know, the markets are very dull this morning, right? There's not a lot of activity. You're not really sure. You get a signal. Well, you can dial down your risk amount to 1%. Now, this will be 1% of my capital. It's not necessarily 1% of yours. Oh, that's too far. Let's try that again. Let's say I choose to risk it below the median line here. Not really sure what's going on, but you can take comfort in knowing that even if the signal fails, which, as good as DTS is, signals will fail. You'll never hear another room moderator tell you that, but yeah, the signal might fail. Okay, so the signal fails. In this case, I would be out $160. It's not the end of the world. It's only 1% of my trading capital, right? So just think, if you only lost 1% of your trading capital, if you're trading a $10,000 account, that would be a $100 hit. Yeah, okay, losing $100 or 160, not much fun, but it's not going to decimate your account. This enables you to actually take a signal like this, and who knows, the signal may actually work out. You may actually see a profit. But knowing that you're never going to risk more than you can afford to lose is a huge weight lifted off your shoulders. So here we are, still a very tiny breakout. Here comes the retest. I'm really hoping to see a failure here. If we see a failure, that's going to cue us up for a nice move lower. Interesting observation here from Mark. Mark says, off-topic question. But while we're watching paint dry, when looking at the actual S&P and NASDAQ, the S&P futures trades close to the actual S&P, but the NASDAQ trades about 500 points higher than the NQ. Why the disparity in the NQ, and is that normal? Well, the S&P is huge, right? It's one of the world's largest markets, so it's going to be closer to the spot price. It's like if you ever look at Forex pairs, if you look at the most common Forex pairs like the Euro, US dollar, or US dollar pound or something like that, the spread is very tight even for a Forex market. But you look at something like the Aussie New Zealand dollar, you can get an enormous spread. I don't know if it's normal. I actually never was much for watching the spot price, but it doesn't really surprise me that the futures is a little bit off of the spot. Some people follow the spot price thinking that it's going to have a rubber band effect or a crystal ball effect on the market, so you can actually get a prelude of where the market is heading next, and that the futures will play catch up, which they will if it gets too far out of sync. So our soybean trade is finally making a little bit of progress. They bounced around for a little bit, but we're holding our own. We'll see whether or not they manage to sneak down there to their profit target. Again, something that, because soybeans have greater follow through, I tend to double the profit objective. We're actually at our high probability target. We've hit it here at $200. So, once again, shows you why it's easier to trade multiples. If I was trading multiples, I would peel off one contract at 200, so I'd have 200 locked. But I'm swinging for the fences today. Okay, well, the NQ very lost at the moment. We might not get anything tradable in the NQ this morning. This red bar buy right here was our best opportunity. I thought about it, I really did, and then I kept thinking about it until it moved a little bit too far. It was too late on the signal. About 5 minutes to inventory for crude oil. We'll see what gives there. Oh, we had a soft edge sell signal here on the Raptor, but it's not the ideal soft edge sell setup. Here's the signal. We're in the soft edge. The band is bullish, so we should be looking for buying opportunities, but it produces a sell signal. Now, these signals tend to retreat at least to the hard edge. Sometimes they'll go much further. Oh, I suppose this could have been the test of the extreme right here, this tiny little hiccup and failure. I was going to say what you want to see before you get the soft edge sell or the inverse, the soft edge buy in the downtrend, is this test of the extreme. Once you get that test of the extreme pattern, it's easier to sell it. It's easier to anticipate the follow through because it is essentially a counter trend signal. All right, a few minutes before crude inventory, let's see if there's anything that we can put together here. Well, no real obvious range, is there? Apart from the channel, I mean. Maybe what we'll do, just so I can show you the OCO function. Now, the OCO stands for one cancels other, of course. And what you do is you enable your OCO, you right-click on your chart, you place your buy order, you place your sell order. Now, these orders are live the moment you put them on your chart, so I tend to place them away and then drag them in to where I want them to be. And maybe I'm going to use the support and resistance suite here as my zone. I'm going to be a little bit more generous to the upside. Maybe we'll go 52.51 on a buy. And I'm going to get a stop strategy ready also. Last week my stop strategy was a little bit too tight and the market did a real quick bounce. Okay, I'm not going to enable it just yet. We might actually see a move higher here. A lot of times, the the DTS tool will actually signal the direction the market's going to go before it actually goes, especially going into reports, which I find very uncanny. In this case, we produced a late filter entry and a trend change buy signal. So at least according to the Falcon, crude oil is looking a little bit on the bullish side. Oh, well done, Mark. Mark says I took a chance on that first micro macro cross near 7 o'clock, near the top of the hour, and on the NASDAQ, and it paid off nice on 3 contracts. Well done, Mark. Way to go. I'm still nursing that soybean trade, but we're kind of playing now with our crude oil. Okay, so here's crude oil, the inventory report. Obviously hitting the floor, the market's getting a little bit more active. And we'll see here in a moment. A trading friend of mine has a different way to trade crude oil. What he'll do is he'll let the report hit the floor, give it a minute for the dust to settle, and then he'll bracket the range. So a couple different ways that you can do this. I'm taking the more aggressive route because that's how I roll. Oh, it's picking up a little, but not very much. So we would have done okay here with our signal. We would have hit our high probability target. Now it looks like they're starting to reverse, possibly giving us a trend change signal to the downside. So what I'll do is if we swing now and head a little bit higher, I'm going to do what my friend does and roll my entry a little bit closer. Okay, now we've got crude oil more or less pinched. So the buyers and sellers doing serious battle here. This particular bar style is the mean Renko bar. And it was specifically designed for DTS, but I do believe that you can purchase it as a standalone. It's terrific in letting you see who is in control of the market. I find that very helpful. So we can see that quite obviously. The sellers took control here, buyers took control here. Let's see if the sellers knock them down again or whether the buyers are going to run them over. All right, here come the sellers. So notice our trend line changed color. Now if the buyers come back, we're going to produce a buy signal. And that will be our trend change signal, which coincidentally is also very close to where our entry will be. So I'm using the swing strategy because it's a little bit more conservative, at least until we get filled, and then I'll consider going with something stronger. Still working that possible trend change signal. We haven't produced the buy signal just yet. Wow, the inventory report did very little to propel the market either higher or lower. In fact, on crude oil here on the Eagle, and trade forecaster says we're in trend mode for nearly an hour. We'll see how that follows through. We're producing a green bar sell, which is a fairly high probability sell signal. We're currently against our filter, so I would have to set it up to take advantage of it once the filter flips, but you can see the problem with crude oil is the valuation makes it difficult to take that type of trade, risking only 2%. Generally speaking, risking anything 5% or less of your trading capital is considered prudent. Okay, if we see the buyers dig in now, then we've really got this market between a rock and a hard place. Wow, look at that. Seems to keep going to wherever I turn my stop strategy. Watch this. I'm going to move the stops to the lows, and that's going to pull the market back down. If it were only that easy. Huh. Nobody's moving today. Everybody's sideways. Well, obviously, crude oil traders believe that crude oil around 52.20, 52.30 is a fair price. All right, here we go. We're getting warmer. Let's see whether or not they can break the top end of this trading range. Back here on the Eagle now. We've produced a rule of 3. We do have our test of the extreme. We've got our rule of 3. So this is actually a possible buy signal. So the Eagle now going from a probable sell, which had no follow through, to a buy. So crude oil looking considerably more bullish. I've already got this trade in place, so I'm not going to bother duplicating it on the Eagle, but it's there available for you. All right, so now that we're long, I'm going to disable the break-even trigger. I'm going to enable my stops. So we've got a little bit of open profit. What I'm going to do is I'm going to move to a more aggressive stop strategy, perhaps like parabolics. Maybe I will take that break-even stop. Get up there, crude oil. Don't look back. So what we've done is we've broken through this high. And so we're going to get this test, probably get this test retest type scenario. I like to give it at least enough room to get outside so that I can ride out the swing. Sorry, I'm trying to multitask here. Trying to manage a trade and talk at the same time. My wife will tell you I cannot multitask, and I don't pretend to. How much have we got on the table? 150 bucks. All right, I'm going to snap it to break even. This is the type of scenario people always ask me, and this is a great story, by the way. If you guys haven't heard the story, you're going to love this. A little while ago, I met a fellow trader. I didn't know they were a trader, but I could tell by the paraphernalia on their desk that they obviously were either a day trader or a computer programmer. And so we got talking about trading and whatnot. And of course, as a trader, you start inquiring about each other's signals and so on and so forth, and markets that you trade. This person trades stocks I'd never heard of. They're not penny stocks, but I guess the biggest one was Visa. But he trades a handful of stocks, just a handful, 6 or 7. Oh, get up there. And the thing that blew me away about the way this person trades is not the way that the markets that they traded, or the way that they managed their trade, although there was quite a bit to that, which I'll get to that in a moment. But how they take their signal. They take their signal based on a feeling. Yes, it is true. They take their signal by how the chart makes them feel. If the chart makes them feel like they should be a buyer, they buy. And if they feel like they should sell, then they sell. 6 years ago, I think he said, this person never traded a day in their life, and now they are trading full time. All right, so this is not just some nut bar who is fooling around with a chart. This is a very successful trader. But what blew me away, aside from the fact that they didn't really have any methodology to their trading, was their money management. His money management was second to none. And what reminded me about him was this trade right here. He says when he's, because people come to him for investment advice, believe it or not. And here's a little quiz that he gives his prospective clients is, he says, would you rather I take $50 now, like if we have $50 open profit, would you rather I take the $50 now? Or if there's a chance you can make 200, do you want me to hold out for the 200? Now, I'll let you think about that for a second. You probably already guessed which way I'm going with this, but answer for yourself if I propose that question to you. If I was trading for you and I could take $50 now, or if we had a chance of making 200, do you want to take the $50 or do you want me to hold out for the 200? And most people will say, hold out for the 200. And yet that is the exact opposite of what this person does. This person will take the $50. And what reminds me is, I was looking at this chart, right? And we're hovering here around $160, $170 open profit. But I didn't take it, right? The market backed up, tapped me at break even. The broker gets paid, but he's the only one. I had $170 on the table. It was mine for the taking. So what if crude oil went to 500 or 600? So what? Really, so what? You don't know it's going to go there, right? So, see, this person was a little bit smarter than I was. This person would have taken the $100 or the $150 and been happy with that. And meanwhile, in my scenario, the broker is the only one who made out on that trade. So there you go, a little bit of what I consider to be kind of interesting little tidbit. Bo is asking about the charts. How many points per brick on the Renko crude oil chart? Okay, now these are not traditional Renkos, as you've probably guessed. The brick size is the same, well, sort of the same. I'm going to tell you the default brick size and then our adjustment. These are the mean Renko bars, so they incorporate a terrible name, I know, but nobody listens to me. They incorporate all the best qualities of a Renko style or a range style bar, while blending them with the sensitivity of a candlestick. So the default settings for the Hawk Scalper are 6 ticks, the Falcon Swing Trader 8 ticks, the Raptor also 8 ticks, by the way, and the Eagle 12 ticks. Although as the summer progresses, if the market gets really slow and our daybreak lines start to, look like this, then I'll probably dial it down to 10 ticks, just so that we get a little bit more feedback out of the Eagle. Now that's good for instruments that are trading at around $10 a tick or less. For those instruments trading at $12.50 a tick or more, namely the E-mini S&P, that's the big one in that category. We go with our alternate settings, which would be 4-tick Hawk, 4-tick Falcon, 6-tick Eagle. And the easy way to remember that is the telephone exchange for Moose Jaw, Saskatchewan. See? Now you'll never forget it. Well, we're still fighting here a bit. Still nothing on the NQ. That amazes me. Alex is asking, the 446 on the E-mini and crude? No, crude trades at $10 a tick. So we go with our default settings. When in doubt, always go with the default settings. Here, I'm going to show you the E-mini because there's nothing going on. And you'll see why we go with the different settings on the E-mini. As soon as that manages to load. All right, so here's the E-mini S&P now. Oh, no, sorry, still loading. Boy, oh boy, they're really, software is really lagging this morning. My poor computer has got too much going on between the recording software and the multiple screens and the DTS and the screen sharing. Please don't crash. Okay, it's still fighting to get the raptor up there. I don't know what's taking that so long, but hopefully I won't break anything if I go to show you the hawk. So here's the hawk on the E-mini, and this was yesterday's session. You essentially produced one signal out of the open. We had a tiny little macro pullback signal right here, and that was the one signal. Today we had a red bar buy signal out of the open, and that was the one signal. Now there's nothing wrong with that, but remember this is supposed to be your hawk scalper. The day before, much more active. That would have been a normal day. The 6-tick brick would have worked just fine. Well, actually, that day was pretty good too. So a lot of volatility earlier in the week. See, what you're looking at is you're looking for a signal to print, like a first micro macro cross, and you're looking to see, did I get follow through from that? Was the signal valid? Okay, so there were a few days there where the E-mini was actually pretty good with the standard setting. So when in doubt, always start with the standard setting. But the problem with the E-mini is that very often it's going to start doing this. And by the end of today, the next daybreak line is going to look like that. So what I'm saying is you're not generating enough signals. So to counteract that, what we do is we dial down the brick size. And we go to the alternate setting. And I better not touch anything. I'll end up seizing the computer. If I disappear, that's what happened. My computer crashed. Thanks everybody for coming out. All right, so here we go now with the alternate setting. So remember yesterday was a rather quiet day, but you can see with the alternate setting, we got a little bit more to work with. Well, here was our first micro macro cross. We at least got a macro pullback signal and a red bar buy toward the end of the session, or in the Asian session, I should say. So we, it wasn't a plethora of signals, but we had more. And then this was the day before, where you can see we still had lots of signals. Here in the overnight, we had a nice first micro macro cross, coupled with a red bar buy. A North American Open, first micro macro cross, macro pullback, red bar buy. So again, we had an assortment of signals to choose from. And that was pretty much it for that session. Here, if you take a look at the Falcon, you're going to see the same kind of scenario where this was yesterday's trading activity. We didn't even, well, I guess we produced one signal, but it was so late in the day, I'm not sure I would have trusted it. You would have had to hold through the overnight, which is fine, but it does require you to put up margin. And here's the Eagle, and you see yesterday no signal at all in the Eagle. Day before we produced, just out of the London Open, a red bar buy. So I suppose if you wanted to take a position trading point of view, where you use the DTS signals to produce longer term trades, that's fine. But from a day trading perspective, these parameters are too large. That's why we dial it down to 4, 4, and 6. So you'll see here in a moment what a 6-tick brick is going to look like. And yesterday, when there was no signal available, at least here we got a with trend signal off of the soft edge. This morning, we got the red bar buy signal. And then the day before, 13th right here. So the market opened, we got a hard edge bounce, and we produced a signal. So you're getting a few more tradable signals. But like I said, if in doubt, go with the default setting. It will be appropriate for 90% of the markets that you are looking at. And if you're ever in doubt, just send us an email. If you're ever in doubt what your brick size should be, here's the Geiger counter on the E-mini. Look at the volume here compared to the NASDAQ. The NASDAQ, we're lucky to see 20 contracts roll by, and here on the E-mini, they're stacked 350 to the top, and I saw 375 to the bottom. Huge, huge market. But, you know, if you're a smaller trader or you're trading a smaller account, a market like the NASDAQ, pretty tough to beat dollar for dollar. If the E-mini makes a $50 move, the NASDAQ will make a $50 move. So they do tend to move dollar for dollar. Plus you get the added advantage of the reduced tick amount, which means that at $5 a tick, I can trade 2 contracts in the NASDAQ, sometimes 3, for every single contract I could take in the E-mini. And that's important because it's so much easier to manage a trade with multiple contracts than it is to manage a single. Okay, you guys, the markets aren't going to do a whole lot for us today. I suspect we're going to see a little bit more sideways action. I am definitely more bearish today than bullish. I think you should be cautious to the upside. Here's why. You see how we're starting to shallow out? You see how we overshot the trend line here? We're coming up a little bit shallow. Yes, I know the market's heading higher, but I don't think it's going to be heading higher for too much longer. That's my guesstimate anyways. Take it for what it's worth. I don't know if it's going to break down this afternoon, if we're going to see it fall enough. If it does, I could see the NQ falling, 45.10 I think would be a very reasonable target. Maybe even 4,500. But they really need to have some sort of news or something or another come across the table to spark the market. I think at the moment they're pretty much content where they're at. How do I know that? Well, see all these yellow bars here on my hawk? It's telling me that the market's not too keen on doing much. Still nursing our soybean trade. Soybeans content to head lower. Don't know if we'll hit the big profit target, but I may pop out of there with some profit soon. Jim's asking here on the Eagle and the Raptor, is this gray cloud an area of support? Yes, it is. We use this cloud, we call it a band, but cloud band, same difference. We use it to determine our directional bias. And the hard edge of the band is always a good buying opportunity. Not necessarily to buy it on a limit, but we look for a signal to generate off of the band. Although I think one of our members does buy it and sell it on a limit. But at any rate, here's a red bar buy off of the hard edge bounce. High probability signal. One that I wish I had taken, but did not. Same thing here with the Raptor. The Raptor, as I mentioned, is a blending of the other three birds, and this trading band was borrowed from the Eagle. And what we tend to look for in the Raptor, because it's a slightly different tool, is what we refer to as a double pullback. So it pulls into the hard edge twice, comes out, generates a buy signal, and then we look to take advantage of that buy signal. And you can see that this one had fairly decent follow through. Struggled a bit, but still some follow through. It's certainly enough to find our high probability profit target. But if you are trading this afternoon, I do think we are going to see this market roll over a little bit. I would not be surprised. My general bias today is that the bears are going to be stepping up and perhaps trying to send the market down. Crude oil has given up on its earlier advance. It too has retreated and is right back to where it started. And soybeans, yeah, they're starting to show signs of support. I think I'm just going to pop out of that trade and grab what open profit I had. So I just punched out of the soybean trade, which we sold from back there. All right, you guys, thank you very much for your attendance. I do hope that you got a little something out of today. The markets were not all that cooperative. Oh, before we go, Bob posted a question here on the NASDAQ. Is it better if one had a larger trading account to take smaller bites of profit and then get out? Well, you know what, Bob? It's a balancing act, right? First, you have to determine what kind of trader you are. Like, if I go back to yesterday's session, and here is this signal right here is what we call a first micro macro cross signal. And I won't get into the specifics of it, but so if I took this trade, I'd probably set it up something like this. I'm all in, all out. The market goes up, hits my profit target. I'm good. It doesn't bother me that the market does this, right? It keeps going and going and going. We did have other opportunities to get in there, but even if I didn't get in, that doesn't bother me. But I do know people who would be bent out of shape that they got out of the trade too early when it was advancing higher and higher. And there is a very strong point to be made that you should always have a runner in play to try to take advantage of this type of move. Now, I believe that to be a very good philosophy because, well, of course, you know, if you had one runner here, if I took profit on two and had one in as a runner, there's times that runner will earn, you know, much, much more than my two all in, all out trades. But I think you need to balance that with your personality. For me, I am very comfortable being all in, all out. I'm with you. You know, take the smaller bites out of the market, put the money in the bank, manage your trade so that, you know, you can reduce your risk. And I'm not talking risk reward ratios here. You can see this trade is very lopsided. It's lopsided for a reason because we're going to deal with probabilities. I want to give this trade a reasonable probability of working out. I don't want to strangle the trade that on the first little hiccup, the market takes me out. Now, DTS, you can see, is very good at finding momentum. We print the signal, there's follow through. We print the signal, there's follow through. We print the signal, there's follow through. But that isn't always the case. Technically, this was a first micro macro cross signal also. So if I set up the trade really tight, all that would have happened is I would have got myself stopped out. Notice the risk amount never changes. I've got $440 at risk. That's 2% of my trading capital. That means I could run a stop down here. Oh, it's still about $400. That means I could run a stop down here. Oh, it's still about $400. That means I could run a stop way down here. Oops, went a little bit too far. I can run a stop way down here, and look, it's still about $400. But did you notice what changed? Was the quantity. So here I'm only trading one contract. When I had my stop here, I think I was trading 3 or 4. When I was trading my stop really right below here, I was trading 8 contracts. What changes though is the probability of the trade. Which trade has the highest probability of success? Well, it's the one with the widest stop. When you get these spammy emails in your inbox saying, latest and greatest trading system produces 86.9% of the time, well, this is how they do it. They run a tighter profit target and they run a big stop. Now, that doesn't mean you need to leave your stop down here in order to take a $50 win, but it does, it does mean you are going to have a whole lot more staying power than if you put your stop right here. If you put your stop right here, you just got stopped out. But if I leave my stop away and now I see the market starting to advance, okay, I don't need to leave my stop down here. I can bring my stop right under here. And now instead of having $400 at risk, I only have $100. And I can start, maybe go with a more aggressive stop strategy like parabolics or bar high low, which will bring my stop in very quickly. And the point is you want to leave yourself in the trade long enough to actually realize a profit. Now, I realize this is an extreme, leaving my stop way down here, but even a more reasonable stop for this trade would have at least been to place your stops below, this area of congestion. And you get in, the market gives you a little heat, you get out, and you make your profit. Okay, so, fairly simple trade. Again, high probability signal. You make your $150. You do that twice a day, that's $300. That's not too bad. Do it 3 times a day, that's $450. That's not asking a lot of the market. And it gives you the luxury of waiting for the best signals, right? You're not looking at all these signals saying, ooh, should I take that? Shouldn't I take that? What should I do with this? You can hold out for, hey, first micro macro cross. You can hold out for the first micro macro cross, set up your trade, and boom, a couple minutes later, you're $150 up. So yes, I fully agree that it's better to take smaller profit targets. It definitely increases your winning probabilities, and hold out for your high probability signals. Bob says or asks, did you say the high quality setups are around 75% win ratios? Yes, actually they're a little bit better than that. I tend not to quote win ratios because people don't believe them. We have one DTS owner who actually did the math, who says he trades primarily the Falcon. And he says on the Falcon, he gets 83.3% win ratios. On the Hawk, I get at least 80% win ratios on the high probability signals. Although I should mention, one of my most profitable months ever, I had a 40% win ratio. So win ratios are not the be all end all. They are important. They do give you confidence, but like I said, one of my best months ever, I was losing more than, or I had more, I wasn't losing more, I was obviously making more. But I called more losing trades than I did winning trades. The difference was when I lost an amount I could afford, A, and B, I was managing my trades to, I tried to get the trade to break even as quickly as I could. That will increase your win ratio. When I took a signal, I did everything I could to, manage the trade correctly. Let's say I took this trade here and I set it up initially like this. Okay, they just kissed our profit target. We actually would have been stopped at break even now because they would have hit our break even trigger. But let's say they didn't. Now I'm going to be on the alert for an opportunity to roll my stop, right? I don't want to lose 400 bucks. Yes, I can afford to lose $400. Remember, this is my account. It's not yours. $400 might be a drop in the bucket to you, or it might be a whole lot of money. But somewhere in this cycle, the market's going to give me one more little swing. How do I know that? Well, the sellers came down, the buyers took them back. The sellers are going to make one more press here. They tried to recover the market here. The sellers tried to take it away. They're not going to walk away. There's going to be a little press somewhere in here, assuming the market comes down. And that will be my cue to start rolling my stop. So I can roll my stop, and let's say the market reverses here and now takes me out. Okay, I took a loss, but I didn't take a $400 loss. Right? Maybe I took a $150 or $200 hit. That's going to wipe out one of my trades. It's not going to wipe out three of my trades. All right, so very important. You have to set up your trades correctly. You have to capitalize yourself correctly. You have to manage yourself correctly. And that's why we have these tools that we do, to give you the ability to do that. You want to know what winning traders do? You want to know what successful traders do to make money? This is what they do. If you nail those three components, if you get a high quality trade, if you manage your trade correctly, if you manage your money correctly, you will be a successful trader. It's math. It's like 2 + 2 = 4. If you do those three things, you will be successful. You cannot help yourself but be successful. Like this trader that I told you about, who uses his gut feeling to call the markets that he's looking at, and he's looking at markets I'd never even heard of. He has impeccable money management skills. Okay, his gut is obviously pretty good because it's not exactly a quality signal that you can reproduce. But, he's got the signal, he's got the trade management, he's got the money management. And he's living on $1 million property, oceanfront property, off of a beautiful spot here on Vancouver Island. So, and 6 years ago, he wasn't a trader. So tell me how money management is not important to your success. All right, I'll let you guys chew on that. We're going to button up the room now. And DTS owners, I will see you in the trading room tomorrow, bright and early. And I hope that for those of you who are our guests today, will consider coming back again next week. Hopefully the markets will shake up a little bit by then. Oh, actually, I think Adam said he was going to have a special for people who attended the room next week. So I'll leave that little hook dangling for you. All right, you guys, have yourselves a great day. If you are trading this afternoon, like I said, I'm still a little bit bearish on this stock indices in spite of the overall bullishness of the market. I can't help but look at this channel and see it coming up shallow. Crude oil falling off, it's probably going to end up ranging sideways. And soybeans, well, they've kind of moved a little bit sideways, but are still kind of bearish. All right, you guys, we'll talk to you later. Bye for now.